I'm going to call this Cold War 2.0, the weaponization of money and a move back to gold. So this year, in a move that absolutely no one seemed to have predicted, Russia invaded the Ukraine and set off a round of asset and currency freezing at a level never seen before. This obviously raised red flags to countries not directly aligned with the NATO group, so the US and EU particularly, and that perhaps the US dollar may not be the ultimate safe haven reserve that they had expected it to be or hoped it would remain. China and Russia have been doing in the background, trading both gold and yuan for oil for the last 10 or so years, which may have helped offset some impact of the freezing of Russian assets. In the middle of that, the Russian central bank announced a gold for rubles program, and that's helped internally support the ruble, which is a good demonstration of gold and how it behaves in a crisis. How do you see gold playing a role in a redivided world, and how I'm going to call it, as geopolitics starts to get heated? And do you think gold's going to emerge as one of the beneficiaries of a potentially renewed conflict between East and West?
Well, this is, the de-dollarization is a topic that we write about for 7 or 8 years now, and we had plenty of interviews with Luke Roman, who's definitely one of the experts on the topic of de-dollarization, and I think that actually, so much happened over the last couple of weeks. It's really hard to grasp everything, and of course, in a couple of years from now, we'll say, well, this was all pretty logical, and why didn't people realize what's actually going on? But at the moment, it's really it's very, very complex. Now, Michael, I have to say that the Ukrainian border is only like 700 kilometers away from Vienna, where I'm currently am. So actually, the war for us with having lots of refugees, and there's so many Ukrainian kids going now to primary school with my kids, and it's very, very, it's really good to see how supportive the kids are and the families are, and how well they integrated within a short time. But it is definitely something that affects us very, very much over here, especially when it comes to the supply of natural gas. And I would be a liar if I would have told you, well, for us it was crystal clear that Putin would make this move. I know so many people, real experts on the topic of Russia, that haven't seen it coming. Well, now, there's so many people, former COVID experts are now experts on geopolitics and Russian history. So,
Yeah.
so I have to say, when it comes to the political side, I think we are all, we are all kind of clueless, and everybody has an opinion. I think everybody hopes that this war will be over soon. I'm not so sure, but I think when it comes to the currency side, we really have seen some major developments, and we were explaining them in this year's report. So I think it's clear, first of all, that for gold, I think it's a very strong case that can be made, because the Western world basically just with one statement, with one stroke of a pen, said, well, your Russian currency reserves, they are basically worthless. And I think this is also a very strong sign for the Chinese, because they now really know what the playbook is, the sanctions playbook, and therefore I don't expect them to do anything in Taiwan soon. I think they are kind of preparing everything, but I think they really follow the steps, the sanctions quite closely. Now, I think, Russia will stay a pariah state for many years to come. I've got many Russian friends, great people, and it's saddening that everything that has to do with Russia is now being labeled as evil and bad. But I think, so much has been broken. It will take a long time, but it also means that I think if there's really like two blocks developing, and I have to quote Gavekal. They said the world is breaking into two distinct economic zones: the empire of the sea, or the Western bloc of nations, and the empire of the land, or the Eastern bloc. The former's currency is based on fiat money, and the latter's on the emerging tandem of commodities, gold, and oil. And I think that's a very, very a good statement that basically sums up our view pretty well. But I think, if those two blocks really develop, and I think this is a very, very strong development that we're currently seeing, and that has already built for a couple of years. I think for those blocks, actually, you will need some sort of a monetary asset that can basically settle trade between the two blocks. And I think that, in this new world monetary order, I think that gold might be the go-to money, because it's internationally recognized. I think, it's very important that, first of all, gold is neutral. Um, and we saw that, it doesn't really belong to a block. Gold is produced and bought all over the world, yeah, for US billionaires and the Indian housewife. So it is really something neutral. It doesn't belong to any state or political party or dictator, whatever. The second thing that is really important: gold has no counterparty risk. And in times of crisis, you want to own something that doesn't have any counterparty risk. US treasuries or the US dollar, we saw that it's basically just a promise, and you have to trust the US government that they will fulfill this promise. But I think that, um, in these times that we are currently you want to hold as little counterparty risk as possible. I think, you have to take out complexity. And this is really what we're currently seeing. And I think that gold, um, not having any counterparty risk, should do well in this environment. And the third thing is, gold is extremely liquid. It's one of the most liquid assets worldwide. It is trading like 150 billion a day. So therefore, I think that gold should play a major role in this new monetary regime. And therefore, it's no coincidence, Michael, the Western countries stopped selling their gold holdings, while emerging markets continue to buy. I expect central bank gold demand to hit new all-time highs over the next couple of years. We see that Russia over the last years bought enormous amounts of gold. We know that China is holding much more than we all expect. Um, we know that in the Arab markets, gold plays a major role. South Asian markets. So I think that's really a very strong long-term case for gold. And therefore, I had a really busy day, because we had the G7 meetings in Germany, and as the next round of the sanctions, they said, well, G7 nations don't expect any Russian gold exports anymore. And everybody was becoming nervous, and nobody had a clue if it's going to be positive or negative for the price of gold. And I said, it's a no event, basically, because
Yeah.
first of all, gold is so liquid. You've got this enormously high stock to flow ratio, more than 200,000 tons of gold. Compared to that, the roughly 300 tons of gold of Russian gold production, that really doesn't move the needle too much. Then obviously the market was already anticipating things like that. So
Yeah.
it didn't come as a big surprise. And then I've said, well, I think that the Chinese friends or friends in Dubai or in India, they're really happy to establish closer relationships with Russian gold miners and pick up their gold production. Yeah. So, and I think that's really something crucial to understand, that gold is such a massive global liquid market that it's just not being disturbed by such moves.
Bullion Depository provides safe, secure, discreet storage of precious metals for sensible investors around the world. If you would like more information on gold storage or New Zealand, please go to our website nzbd.com.